the more the curve goes closer to zero, because the long end's going up in terms of yield, the more it's a sign that they're going to have to do something. My point I've been making for a long time, I think last time we spoke, I said this, is the recession got priced in last year. Crypto assets don't go down 80%. The NASDAQ went down 35%. The long end of growth technology like ARK was down 78%. That was the recession, right? So what we've got is markets that are forward-looking because they understand the liquidity cycles now. So that's why they're going up and have been going up. I managed to participate in most of this in both crypto and in technology stocks because I knew that liquidity was coming back slowly. So even though the Fed are doing quantitative tightening and the Treasury issuing, because of this drawdown and this reverse repo, all of this stuff basically means they've not been tightening liquidity for ages now, the everything code, which was the idea is that because there's so much debt that needs to get refinanced every 3 to 5 years, we get this 4-year cycle. The reason being is everybody reset interest rates at zero in 2009. And we've been following this 4-year cycle ever since. The whole economy's following it. It happens to be the halving cycle as well. It's all the same thing. And so what I discovered, and I think I was the only person to do this, was I found out that the Fed balance sheet basically is a 3.5-year lag of the interest payments that are due from the previous cycle. Now, if you think about the previous cycle, well, what was that? The pandemic. There was I think technically it would be called a shit ton of issuance that happened then.
Slightly.
And so that needs to get monetized, right? And we're seeing, this is early stage, but we've got like 12 trillion of this stuff to roll. Plus the new issuance. There's no way. It can't happen. So either the economy goes down the toilet. My view is the reason the Fed are so slow is because they want inflation to undershoot to give them the cover to refinance the debt. If not, they'll do what the Japanese are doing, which is yield curve control, which is buying all bonds at a fixed price. So let's say they say 5%, we'll buy any bond you want to sell us. That is still more cowbell, more stimulus that comes into the system. There is no way of managing an economy that grows this slowly with this much debt. If you had a faster growing economy, it'll be fine. But let's say on average, to make the maths easy, let's say the economy grows at 1.5%, the trend rate of economic growth is about 1.7%. The US government is about 120% of GDP in debt. And interest rates, if they're above 1.5%, means all the economic activity just goes to pay the interest on the US government debt. Problem is the private sector, they're over 100% of GDP in debt, so who pays for that? So what's happening is the Fed are monetizing all of the government debt 4 years later, or 3.5 years later, and the private sector does its own thing. But there's just not enough GDP growth, and that's the problem. That's what we're seeing in the market. That's what's going on here. So stimulus is the only way.
The SEC is in a tight spot. JP Morgan warns that rejecting Bitcoin ETF applications could lead to legal action. There are about 8 to 10 ETF applications waiting for approval. Meanwhile, Bitcoin is holding steady at around $34,500. JP Morgan suggests that if the SEC keeps turning down ETFs, it might end up in court. Think Grayscale. They got a SEC nod, and that could set the stage for more legal battles. They wanted to turn their Bitcoin trust into an ETF, but the SEC said no. Then the court said, think it over again. Now BlackRock wants in on the action. They've applied for their ETF, maybe starting in October. But hold your horses, don't get too excited. Bloomberg says, calm down, folks. JP Morgan's more optimistic. They're betting on the SEC saying yes to BlackRock. But if the SEC says no, JP Morgan thinks BlackRock might call their lawyers. It's like an ETF buffet at the SEC. You've got ARK Invest, BlackRock, Bitwise, WisdomTree, Fidelity, and Invesco. And JP Morgan thinks the SEC will likely say yes to a few soon. Bitcoin's price, it's a roller coaster. It hit over $35,000, thanks to all the ETF excitement. But it corrected and stuck around $34,500. Traders are watching for the next big move. ETFs are like golden tickets to the Bitcoin factory. They let regular folks invest in Bitcoin through the stock market. It's like buying a piece of Bitcoin without the complications. So these ETFs are a big deal for Bitcoin's price. Hold on because the SEC might give the thumbs up to some Bitcoin ETFs soon. If they do, Bitcoin's price might hit $35,460 and trigger a buying frenzy, pushing it to $37,200. But be cautious. Bitcoin's under pressure. If sellers take control, the price could drop to $33,100 or even $31,200. Hold on tight, the Bitcoin roller coaster is not done yet. Now let's see what the crystal ball says about Bitcoin's future. Bitcoin could be on the comeback trail. It ended last week strong at $34.5 thousand. It's now back at $34,260 in Asia. The secret weapon, the golden cross. It's when the 50-day moving average crosses over the 200-day moving average. It killed the bearish mood. Crypto experts say Bitcoin might aim for $38.39, but watch out for retests around $31,000. If it drops below, things could get stormy. Captain Fabic, a crypto expert, believes Bitcoin could hit $52,000 soon. That's like saying Bitcoin's about to become a superhero. Bitcoin's rise is driven by demand from regular and big investors. When Bitcoin's mining stats are strong, it's like a bat signal for more action. So get ready for more twists on the Bitcoin roller coaster. Let's continue our discussion with Raoul Pal.
The banks, which they did once with Basel III and all of that, they changed it so the banks bought the bonds. When there's too much there, they'll force the pension system, which Europeans did and the Brits did. They forced the pension system to hold more bonds than equities, to say, we've got this aging population, you need to be more risk adverse, we'll change the pension risk rules. What it means is you're buying the bonds now.
Yeah, just that worked out really well for the banks that collapsed a few months ago.
And yeah, exactly. And what's going on here that people don't realize is this, governments are a function of the money that we put into the government, taxes and other stuff. So we don't have enough taxes because the economy is too slow to pay the interest on the debt, blah, 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 blah. So what you do is debase the currency and mutualize the debt across it, the losses across everybody.
Socialize.
And the only people, to socialize the losses. And the only people who manage to offset it are the ones who can buy scarcer assets. And the scarcer assets, so if you divide the S&P 500 by the Fed balance sheet, it's pretty much been flat since 2008. Gold, flat. Real estate, flat. There's only two assets that have actually outperformed the balance sheet, which are crypto and technology,
right?
Because they're both in exponential growth phases. So it's actually not that complicated a world. We just make it complicated on Twitter.
But you talked about the fact that the price action that we saw, the drawdown of 70, 80% of all these assets was the recession, but that's not the recession for your average person, right? So that's the recession for the stock market.
Correct.
But that's not the recession for your average person who's paying $100 for some Takis and Tostitos.
Yeah, and I would argue that people are feeling the real pain. They first felt the pain from inflation. They loaded up on credit card debt. They did whatever they could to hope that went away. As we know, even though inflation may be quashed, the prices never come down.
Yeah.
So you've lost that purchasing power. And I think people are feeling it more intensely this quarter and probably next quarter. I think the unemployment numbers will continue to rise. I don't know a single business that hasn't laid off people. I don't know people who are not finding their revenues have gone down unless you happen to be OpenAI or somebody. Most people are struggling. I mean, Elon made it very clear on his call about Tesla. It's like, nobody's got any money.
If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.